Let's talk about retirement. It's the dream, right? Sandy beaches, endless free time, finally pursuing those passions. But the reality for many Americans is far less idyllic. The average American only has a small amount saved for retirement. This is a scary statistic. It's time to face the music and take control of our futures. Many people are living paycheck to paycheck. Saving for retirement seems impossible. But we need to change this mindset. Every dollar saved is a step towards financial freedom. It's about making smart choices today for a brighter tomorrow. Remember, retirement isn't about being rich, it's about having enough. Enough to cover your needs, pursue your passions, and live comfortably. It's about financial security and peace of mind. Let's build that future together. Let's get real about our finances, set realistic goals, and start making those dreams a reality. It's never too late to start. Your future self will thank you. Retirement planning is like mapping a journey. You need to know your destination before you can plot the course. This means understanding your retirement needs versus your wants. Needs are non-negotiable: housing, healthcare, food. Wants are the fun stuff: travel, hobbies, that vintage car you've always dreamed of. Start by listing your monthly expenses. Be honest, then categorize each expense as a need or a want. This will give you a clear picture of your essential spending. Remember, your needs in retirement might change. You might not have a mortgage, but healthcare costs can increase. Once you have your needs and wants defined, you can start putting a price tag on your retirement dream. Where do you want to live? Will you travel? Do you have hobbies that require funding? This might seem daunting, but it's empowering. By understanding your needs and desires, you can set realistic savings goals. You'll be able to track your progress and make adjustments along the way. Remember, knowledge is power. Time is your greatest asset when it comes to retirement savings. The earlier you start, the more time your money has to grow. Compound interest is your best friend. It's the magic that happens when your money earns interest on your initial investment and any accumulated interest. It's like earning interest on your interest. Imagine two people, both aiming to retire at 65. Person A starts saving at 25, while person B waits until 45. Even if they contribute the same amount, person A will have significantly more at retirement. This is the power of compound interest over time. Don't let procrastination steal your financial future. It's never too early to start saving. Even small contributions add up over time thanks to the magic of compounding. Remember, the journey of 1,000 miles begins with a single step. Start small if you need to. Even $50 a month into a retirement account is a step in the right direction. The important thing is to develop the habit of saving and let time work its magic. Your future self will thank you for starting today. The 10% rule is a simple yet powerful saving strategy. It suggests saving 10% of your pre-tax income for retirement. This might seem daunting, especially when you're starting your career. But remember, every little bit counts. Start by automating your savings. Set up a system where 10% of each paycheck is automatically transferred to your retirement account. You'll learn to live on the remaining 90%, and your savings will grow effortlessly. The beauty of the 10% rule is its consistency. By saving consistently over time, you benefit from dollar cost averaging. This means you buy more shares when the market is down and fewer when it's up, averaging out your investment cost over time. Remember, saving for retirement is a marathon, not a sprint. The 10% rule provides a steady, sustainable approach to building a comfortable retirement nest egg. Start today and let the power of consistency work its magic. Section 5, the daring 75% for 7 years. For those seeking a more aggressive approach to early retirement, the 75% rule offers an intriguing path. It requires a high level of dedication and discipline but promises significant rewards. The goal is to achieve financial independence within a 7-year time frame. This strategy involves supercharging your savings rate to 75% of your income. This might seem extreme, but it allows you to accumulate a substantial nest egg quickly. It requires embracing a frugal lifestyle and finding creative ways to increase your income. The 75% rule is not for everyone, but it demonstrates the power of aggressive saving and strategic living. It highlights that financial freedom can be achieved in a shorter time frame with dedication and a clear vision. Remember, this approach requires careful planning and execution. It's crucial to have a solid financial plan, manage your expenses diligently, and invest wisely to make this strategy work. Section 6, the magic $1.80 million, your ticket to financial freedom. You might be wondering, why $1.8 million? It seems like an arbitrary number, but it's based on a simple calculation. It's the amount you need to withdraw 4% annually, or $72,000 to cover your living expenses in retirement. This assumes a conservative average annual return of 7% on your investments. Of course, your magic number might be higher or lower depending on your individual needs and lifestyle. But $1.8 million serves as a good benchmark for a comfortable retirement. It provides a tangible target to strive for and helps you stay motivated on your savings journey. Remember, reaching $1.8 million isn't about deprivation. It's about making smart financial choices today to secure your future. It's about achieving financial independence and having the freedom to live on your own terms. Start by calculating your own magic number. Then, break down your savings goal into smaller, manageable milestones. This will make the journey less daunting and more achievable. Celebrate each milestone as you progress toward your financial freedom. Section 7. The 4% Rule, your retirement paycheck. Once you've reached your magic number, the 4% rule helps you make it last. This rule suggests withdrawing 4% of your retirement portfolio in your first year of retirement and adjusting that amount for inflation each following year. This strategy aims to provide a sustainable income stream throughout your retirement years. By withdrawing a reasonable percentage, your portfolio has the potential to continue growing even as you draw from it. Remember, the 4% rule is a guideline, not a guarantee. Market fluctuations and unexpected expenses can impact your portfolio's longevity. It's essential to monitor your withdrawals and make adjustments as needed. Consider working with a financial advisor to develop a personalized withdrawal strategy that aligns with your risk tolerance and retirement goals. This will provide peace of mind knowing your finances are in capable hands. Section 8. Outpacing inflation, why your money needs to work harder. Inflation is the silent killer of your purchasing power. It's the gradual increase in prices over time, meaning your money buys less in the future than it does today. To maintain your standard of living in retirement, your savings need to outpace inflation. This is where investing comes in. By investing your money in assets like stocks, bonds, and real estate, you give it the potential to grow at a rate higher than inflation. Holding your money in a savings account won't cut it. The interest earned often fails to keep up with inflation. Remember, investing involves risk, but it's a calculated risk worth taking. Diversifying your investments across different asset classes can help mitigate risk and maximize your potential for returns. Educate yourself about different investment options or consult with a financial advisor to create a portfolio that aligns with your risk tolerance and retirement goals. Don't let inflation erode your hard-earned savings. Section 9. The S&P 500, a historical perspective. The S&P 500 is a stock market index that tracks the performance of 500 large companies listed on U.S. stock exchanges. It's often used as a benchmark for the overall stock market's performance. Historically, the S&P 500 has generated an average annual return of around 10%. This doesn't mean you'll earn a guaranteed 10% return every year. The stock market is unpredictable and returns can fluctuate significantly from year to year. However, over the long term, the S&P 500 has consistently trended upwards. Remember, past performance is not indicative of future results. Investing in the stock market always carries risk. However, the S&P 500's historical performance demonstrates the growth potential of investing in the market over the long term. Consider investing in low-cost index funds that track the S&P 500. This provides a simple and effective way to participate in the stock market's growth potential and potentially outpace inflation. Section 10. Don't just dream it, achieve it, start today. Retirement planning might seem overwhelming, but it doesn't have to be. Start by taking small, actionable steps today. Open a retirement account even if you can only contribute a small amount initially. Every dollar saved is a step towards your financial freedom. Create a budget and track your expenses. This will help you identify areas where you can cut back and free up more money for savings. Remember, small changes in your spending habits can lead to significant savings over time. Don't be afraid to seek help if needed. Talk to a financial advisor who can guide you through the retirement planning process and answer your questions. They can help you create a personalized plan that aligns with your unique circumstances and goals. Remember, the most important step is to start. Don't let procrastination steal your financial future. Take control of your finances today and build the retirement of your dreams. Section 11. Your rich retirement starts now. Retirement isn't just about money, it's about freedom. It's about having the financial security to live life on your own terms. Whether you dream of traveling the world, pursuing a passion project, or simply enjoying time with loved ones, financial freedom empowers you to make those dreams a reality. Building a rich retirement starts with a mindset shift. It's about recognizing that your future self deserves financial security just as much as your present self. It's about making conscious choices today that will benefit you for decades to come. Remember, you are in control of your financial destiny. By taking charge of your finances, investing wisely, and staying committed to your goals, you can create a retirement filled with possibilities. Start today and let the journey to financial freedom begin.